Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 0.5% there. On the S&P Nasdaq down 1.5%. Semiconductor got hit 2% negative. Dow holding up better. Russell 2000 1.1. Transport and the banks down a little bit. Energy is green today. Biotech down 1.3%. Healthcare up. Home builders down. Utilities up 1.3%, 1.7% today. Retail and emerging market down about 1.4%, so Bitcoin down 7%. Gold, silver, miners up a little bit while silver's down. Dollar up, oil down, treasury bond up, VIX is down. Let's look at the S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday. Right, and looks like we opened up, we gapped up actually. So this is where we opened up right here. So you can see we actually gapped up this morning, but guess what? My midterm moving average is hanging around in that vicinity. And remember, we've been talking about this midterm moving average for quite some time, that it does have impressive resume, that it does carry some weight, because last time, and I talked about how buyers, the bulls, are scared of the midterm moving average, because last time when the bulls met with my midterm moving average, well, this thing tanked for like half month straight. So you can see how quickly when we gapped up this morning, we tanked pretty much on that first hour right away. But thankfully though, my short-term moving average and my micro-term moving averages is short-term and the micro-term moving averages, they're there, at least for now. For today, it is trying to support the buyers. So you can see bears were not able to get below that the short-term moving average, which is that the light green or blue type of color there, and then very light green right here. That's a short micro-term, and this is a short-term. Right, you can see how now what has acted as resistance in the past, right? Now potentially, we don't know that yet. We could kind of lose that. So what the buyers need to do as quickly as possible is that kind of utilize this as new support and then surf it up. That will be the only way to defeat this midterm moving average right here, and utilize and to tame that short-term moving average. I'm talking about this guy right here, to support the buyers by surfing it up and letting that moving average start to have the trajectory to the upside. Because right now, overall, that short-term moving average is still declining, right? And we need to see that short-term moving average start to make that incline, right? And micro-term moving average is barely, we're just right on it. It is rising as of today, but the micro-term moving average can fluctuate back and forth quite a bit. So it's sort of a double support here. We got the short term and the micro term. Bulls really need to kind of use this momentum. What momentum am I talking about? Well, we can see since the late February, bulls have built this momentum right here, right? If they want this momentum continue, they need to continue to work at this, continue to use this micro term and the short term moving average as new support, and bring it out as quickly as possible, because the presence, the weight of this midterm moving average is quite heavy at this point. The more you let bears, you know what I'm saying, hang around and give them chance to bring it down, they will bring it down, and bears will come down and fill this gap. So this is a very important level for both bears and for the bulls right here. It's going to be the battle of the moving averages right now. What the bulls want to do here, we're going to have a very clear objective at this point. What the bulls want to do, break above the midterm moving average and go up and fill this gap. What the bears want to do, break below both short-term and the micro-term moving average and fill this up gap as quickly as possible. That's what either bulls or bears need to do. If we see either scenario happening or playing out either tomorrow or next week, that's gonna set the tone probably for the month of March. Let's check out that oscillator and see if we can extract any more information. So here is a problem And that adds to the potentially how heavy it is for this in this level. You can see we obviously been talking about the midterm moving average all day today, but we got that slight higher high here on the price action, but we have the lower high and we crossed down. That's a bearish divergence. So you guys remember when we had the bullish divergence right here, right? Price made lower low, the oscillator made higher high. We kind of have that inverted scenario right here. Price made that higher high and the oscillator made that lower high here. So we have the bearish divergence to add to that midterm moving average. So if bears bring it down, they have all the means, all the power, bring it down, fill this gap, even bring it lower. But the momentum though, what the buyers have built in the last, I don't know, 5 trading sessions or so, they have that momentum and they can use that momentum to kind of push themselves up to get up here. It's another one of those situations which we talked about on the last night's update, that is a kind of that 50-50 scenario. It's very, very hard where this market is gonna break out or break down to. We just kind of have to see, and we're gonna have to let this market tell us how this market is gonna set the tone for the month of March. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.